possibility of reopening the tourism and hospitality industry. What is in focus this fresh trading week? Well, let's kick off with some offshore news. You can see in my terminal here the lira in Turkey tumbled following President Erdogan's weekend threats to expel ambassadors of 10 foreign countries, including those of the US and Germany. That is, of course, something quite problematic for their currency. You can see on my terminal here how the equities markets are going. Let's zoom in on Asia Pacific here. China has warned that new infections will increase in the coming days after an outbreak fueled by the Delta variant has expanded now to 11 provinces. Traders are assessing that. On the upside, though, you've got U.S. health officials signaling confidence on vaccination of children from 5 to 11 years old. That will be by around early November. Now, more things when we talk about the equity space over in the U.S., the five largest technology companies are set to report their earnings this week. You've got Amazon, Apple, Facebook, Microsoft, and Twitter. And over to Europe, the European Central Bank's meeting this week will be closely watched. There is, of course, going to be guidance on the pandemic bond buying program. Elsewhere, when we talk about oil, crude oil extended a rally there. Saudi Arabia saying oil producers should not take the rise in prices for granted because the COVID pandemic could still be hitting the demand. Meanwhile, Bitcoin was trading at around $61,000. Let's take a look at our own index, opening roughly or slightly at least towards the downside here at 7285.83. This, according to some analysts, expect sideways trading this week. Of course, after we saw last week's excitement, recall that last week we had broken past 7,300. However, there was a profit taking on Friday. We settled just below that amount. Still, week on week, we were actually up. And this, of course, driven by a lot of the sentiment that's been going on the lowering of cases. You've got Octa Research Fellow Guido David saying on Saturday that our weekly case average in the metro went down to 996 or lower than 1,000 cases per week for the first time since July of to 28. So that was, of course, last week. And of course, we also had the health department saying on Thursday, restrictions in Metro Manila may be downgraded to alert level 2. And we do have one major earnings to be reporting here. BDO third quarter net income 11.02 billion pesos. That's down 11% year on year. That's as the revenues in the third quarter were up by 1%. But when you take a look at the 9-month revenue, that was actually down by 4.1% year on year to 152 billion pesos. And one analyst does say that earnings will be in focus this week to tilt the sideways movements one way or another. We have him here with us, Luis Lumlingan, Head of Sales at Regina Capital. Good morning, Luis, and welcome to Business World Live.
Hi, good morning. Thank you for having me.
Luis, let's kick off with these earnings here of BDO. What's your reaction here? On the one hand, it's lower year on year, double digits for the third quarter at least. But on the other hand, you do have some analysts already having expected that, and some even saying that this was better than what they were expecting.
Well, again, if you try to look into the numbers, for one, yes, if you compare it to third quarter of last year, it was weaker. But what happened was last year they front loaded the provisions, so videos losses were much more heavier in the first half, and that's why you saw such a steep climb in the second half of 2020. Here, it's more normalized. Um, of course, I think the concern now is just really the non-performing loans, which I think is still within an acceptable range. Also, I think what happened is because again you're seeing the defaults come in because of course last year you're making the provisions. Now you're seeing a lot of the defaults because again it's been I'd say around 18 months since the lockdown. Of course, some businesses are suffering, but at least the numbers are still healthy, and compared to BPI, it's still rather or still within what we think is an acceptable range, and that's why we think it's still in line.
Okay, Luis, can you clarify that with the provisions that they've set aside and the non-performing loans? Can you say that those non-performing loans are already going to be covered, or will we be expecting more pain and more provisions need to be set aside, not just by BDO but by the biggest banks?
Yes, well, again, it depends. You really have to look at it among these non-performing loans. Which ones are probably going to be look like they're going to default? Which ones do you think are going to get some refinancing? Also, the quality of the loans as well are a lot of these corporates, so it's easy, it's easy for them to get some assistance. If it's personal loans, again, that one you have to look at them individually. So that makes it much more of a concern. I think for BDO, at least they're more skewed to the corporate. So that's why people think that it's still healthy, even if the non-performing loans are still elevated from where they were versus the pre-pandemic.
Okay, what about their core business, which is of course lending? With the Banco Central saying they're unlikely to increase the interest rates, which are at a record low despite the rising inflation here, and the banks still risk averse. You can see that the lending figures still quite tepid. Are we expecting the banks to stage a comeback anytime soon, especially with the reopening of the economy?
Well, everyone is expecting that's going to be the case for 2022. If the economy is going to be reopening, a lot of businesses, I think, are going to be picking up as well. So they need to be borrowing. That's going to be the case. I think in terms of the rates, what I think is more essential is that there won't be any shock. So if the BSP signals that there won't be any rate hikes for this foreseeable period, at least the banks can make their assumptions moving forward. If BSP suddenly raises rates, uh, in the next meeting, which they've already signaled that they're probably not, it's not going to happen, then probably that's going to send some shockwaves to the bank. So they have to, change their assumptions, and it's going to affect all the loans that they've been given out to recently.
Okay, I wanted to talk about other earnings that you mentioned might be tilting the movement. Some are saying that we already had quite a nice rally last week, but you said to Businessworld that we need to be watching out for earnings. Which ones do you mean by that? Which ones are you most excited about and most worried about as well?
Well, for one, we were keeping an eye out on the power companies because they're pre-pandemic, they were saying that there was supposed to be a supply shortage, and again, sun was during the summer season, especially, the sun was being raised to yellow alert. This didn't manifest, obviously, because all the circumstances, but it could because of, again, there's going to be a reopening of economy, election season.
Mm.
Businesses want to make up for all the lost time, so we want to keep an eye out on that. We've seen that the West have spiked, oil as well. Uh, so that's what we want to look out for. Probably there might be hints when the third quarter comes out, and especially with the analyst briefing, I'm sure they're going to be asking the management of these companies as to what they think is going to be the assumptions moving forward. So they're probably going to be making their bets. Second, of course, is going to be the consumer companies. Now, of course, again, keeping in line with the same theme is that they're going to be the ones who are going to be benefiting from all the campaign spending. But one is how will the dynamics come to play given that it's a different landscape? Is it going to be more driven by e-commerce? How are they going to be doing the campaigning? And second, again, will inflation also affect it because we're still elevated at around 5%, not the 2% that we are used to.
Okay. Luis, we hit 7,300 last week. Can you say that markets have already priced in the fact that, in the third quarter, we reverted to ECQ and this might have severely impacted the earnings already? And we're not looking back at those earnings anymore and looking just forward into, the reopening, alert level 2 imminent maybe, and also consumer spending in the fourth quarter.
Yes, everyone is trying to be more forward looking, but I think one is when the third quarter comes out there, it's at least in line with what everyone expected, even if maybe if some underperformed a bit. I think that's acceptable because again, so many things happened during the third quarter where they had to tighten the restrictions, inflation spiked suddenly, oil as well. So if the third quarter is acceptable, and I guess management gives guidelines or guidance as to what's going to happen for the next 6 to 12 months, then probably I think we're still going to be seeing a lot of buying and bargain hunting between now and when earnings come out, and especially with the third quarter GDP. So right now, I think they're going to be positioning, rebalancing um, as to what they think is going to be the performance of 2022 with regard to each specific sector.
How worried are you about the rise in oil prices? It's now being a topic that at least even cutting the excise taxes in the election campaigns, and it's also very sensitive, not just in the domestic markets, but of course in offshore markets.
At least for as far as the Philippines is concerned, oil, we import 99% of our oil requirements. You look at inflation, 10% is tied to transportation, but 50% is indirectly tied to oil, right? With businesses being affected. So yes, I think there is some effect. Now, in years past, we've seen oil rise to well above 100. So we're not looking at that yet. So this one is still within uh, manageable territory. But I would like to see it normalize in the coming months. 80, we've seen it, cross 80 and above prior to that. But when it reaches, I think close to 100, that's when I think it becomes much more of a concern.
Okay, so right now, not really concerning. How does this affect your outlook on the airline industry specifically, which is very very oil sensitive and of course has been marred with difficulty even before that whole oil story. You've also got PAL reporting at least to the U.S. bankruptcy court their 1.5 billion peso loss on September. Tell us, is this a time to be entering if you do say that the markets are reopening, we might be having travels back here, we might be having more foot traffic in airports, or is this oil story going to be making that outlook gloomier?
Well, again, oil, you think about it, and oil accounts for 60 to 65% the cost of an airline. So bulk of what you're paying for a ticket is mainly to cover for the cost of fuel. Now, I mean, if you look at it, oil used to be trading at 65 to 70. Now it's around 85. So that's around 50%. So perhaps if with what's happening in the airline industry, assuming that ticket prices go up 15%, I think it's still acceptable given that
Okay.
people haven't been traveling, whether it's for business or leisure. So there's a lot of pent up demand. So this is something I think that consumers can still absorb, especially in the short term. Even like how much people have been holding back from spending on traveling.
Okay, so kaya pa until we of course hit that 100 per barrel level. We can still absorb these oil shocks as well. And thank you so much for all of those insights, Luis Lumian of Regina Capital.
Thank you.
Checking in on other headlines, the government has collected more than 13 billion pesos in tax amnesty programs. The Finance Department says the estate tax amnesty program has yielded over 5 billion pesos. That's from almost 68,000 individuals as of September 7th, while almost 8 billion pesos were collected from over 6,000 delinquency accounts. Meanwhile, Finance Secretary Sonny Dominguez expects to narrow its budget deficit, with the government having raised tax collections end September. Dominguez said that tax collections in September already rose above 9% to about 2 trillion pesos from a year earlier. The BIR is expected to collect about 2 trillion pesos this year, while the Bureau of Customs is estimated to raise 620 billion pesos for a total of 2.7 trillion pesos. Now, Senate Energy Committee Chairman Win Gatchalian said the approval of UDENA's purchase of Chevron Malampaya shares is defective and therefore invalid. The Energy Department approved the deal for the purchase of Chevron's 45% stake in the offshore Malampaya gas field in Palawan, but Gatchalian said the approval is invalid because there's a lot of, quote, inconsistencies and might lead to confusion. The senator earlier questioned the deal between UDENA and Chevron, as the law requires prior approval from the government in sale transactions involving oil exploration. Energy Secretary Alfonso Cusi said the DOE approved the sale through a farm-in process, referring to a deal where an investor acquires a stake from an existing participant in an oil or gas project. But Gatchalian pointed out that the said farm-in agreement process was not stated in any of the documents submitted by the DOE on the Malampaya buyout. And that's the first look into the business day. Today is Monday, October 25th, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.